Thank you very much, John. Happy Wednesday. Welcome to another session of RM Smart Investing, another class. And I thought this week we want to go back to our commodities corner. We've had quite a few classes on commodities, but something that we haven't done. And with the energy being so hot, of course, commodities being a hot subject, I thought, why don't we talk about investing in uranium? Which is basically when we think about nuclear energy, that becomes the subject. I put two, and this is the yellow cake. And when we think about uranium, of course, there's two thoughts comes in, one positive, obviously clean energy, and the other one is negative. And hopefully the rest of our lives, we and our children's lives, we don't have to worry about the negative side of things. We want to think about positive, which is the clean energy part of this. So basically, uranium is just show the two types with the silver gray metal, and it is primary uses, as I mentioned, is for the nuclear power plants, and there's some metal and energy as making the metal and energy commodity. Now, the reason this is important because 1 kilogram of uranium can produce as much energy as 1,500 tons of coal. So just a little history, uranium was discovered in 1789 by German chemist Martin Heinrich Klaproth, and it is an important energy mineral. Now, it was not very popular. It was not really used till the first commercial nuclear power plant came in UK, actually, in 1956. Before that, it came out about 1952. And before that, uranium production was mainly dedicated for the military requirements. In the 1940s, most of the world's uranium came from Shinkoloboi mine in Belgian Congo. And during this time, this one in the Canadians El Dorado mine also supplied uranium for the Manhattan Project, which are familiar, and of course the world's first atomic bomb. So again, the thought has always been when you think about nuclear, we go back and we think about the nuclear bombs. However, at the end of the World War II, it marked the beginning of two events, and that changed the uranium industry. One was Cold War, and the advent of nuclear energy. And the reason I want to bring uranium this week, of course, with all the events going around the globe, we think about Ukraine and the Russian war, and of course we are getting a feeling of this Cold War mentality again. Some of you who are not old enough won't remember, but when we think about 60s and 70s and 80s, there's obviously at that time United States and Soviet Union, and now with the emergence of Russia, but of course China, the feelings are that are we getting back to the nationalization rather than globalization, and what are the odds of that? So the feelings are getting there, and that's where the concern comes. And of course, with the talking about commodities, the energy prices, that also has helped to think about the nuclear energy, and on top of that, the environment. And again, we talk about the ESG and the clean air. So as of 2020, the mine production actually covered only 74% of the world reactor requirements, and analysts expect that the market deficit to continue through 2022, which is now. Now, I mentioned about the clean energy, and that has been a boost for uranium demand, and especially some of these countries such as China, they need the energy as much as energy as possible. They're embracing the nuclear energy, and we've talked about obviously from the crude oil point of view, and also obviously coal. They use lots of coal. So with the emergence of wind power and solar energy, now nuclear energy is becoming an important factor in China. Now, Australia ranked third as far as the production of the uranium, and we will discuss it in the next slides, with uh, but the main thing I want to show this that they have Olympic Dam, and that's the largest known uranium deposit. Also, it's important to know, as of 2020, Russia was responsible for 43% of the world's uranium enrichment. Now, the talks, like for instance, with Iran, and thinking about with emergence of like Saudi Arabia, and of course we are unknown about Israel. Now, 43%, that's a huge number, and that's why Russia keeps its acquaintances and the neighboring countries close, and that's why it's also important to understand what is happening with uranium. I think this is an interesting chart, and it goes back 70 years. We're looking at the uranium production, and some of the things was we really peaked from we peaked in 1980. From 1960 to 1980, as you can see, there was the huge movements. And I mentioned 1952. Believe it or not, East Germany was the world's largest producer of the uranium, and from 1950 to 1956. And basically, the first nuclear power in 1954, it came online in USSR, and then in 1956, as I mentioned, it was commercialized in UK. Now, what we want to look at is, this is the 1980. Look at the production. And of course, you see how US had a big role in that. And then we had the old Soviet Union. And then, of course, it's end of the Cold War in 1990s. And then we got segmented at that time. And basically, we will discuss it. Obviously, the unfortunate things happened with the nuclear power plants. And what happened was the obviously production and usage diminished. And then Canada continued growth, but it was the Kazakhstan, which is now by far the largest producer of uranium. And United States has really narrowed. As you can see, the production is very, very nominal. So it's important to see the emergence of what has happened. So as I mentioned, 1960 to 1988, the uranium production actually increased by 53%, which it hit all-time high at 69,692 tons. So once we look at 1980, we can see that, believe it or not, US had the 24% of the production, and USSR, the Soviet Union, had 23%. Canada was third, and then South Africa was fourth. So you see there were obviously East Germany and Niger and Namibia, France, Czechoslovakia at that time, Australia. So the reason for this, again, that big production was, I mentioned again, the Cold War. You can remember, the US and Soviet Union, going at it. Of course, there was a rising demand for nuclear energy, and because of one of the main reasons was the 1973 OPEC crisis. And again, as I mentioned, it's kind of similarity what we're going right now with, kind of a crude oil crisis in a way, which especially we don't feel it that much in the United States, but in Europe. And again, with the clean energy, the rising demand for nuclear energy, and I mentioned about Cold War. So where are we now? This is as of 2019, the latest figures that I have is, as I mentioned, Kazakhstan is responsible for 42% of the world production, followed by Canada and Australia closely, 13% and 12%. Then we have Namibia, Uzbekistan, Niger still there. And also Russia has 5% and Ukraine has 1%. So once you add these up, 1, 5, and then Uzbekistan 6 and Kazakhstan 42, we are looking at about 55% or so of the old Soviet Union blocks really be owning the uranium production. And then China has 3%, and India has about 1%. So you see, United States is very minimal. Saying in another way, in the graph, you can see how they all work out. So again, 95% of world production used for the nuclear power, and the 5% for medical and aerospace and electronics. Now, there are different kinds of productions that I mentioned. Is the natural uranium, your yellow cake we've seen, and again we talked about the silver, and it's converted, and then it converts to nuclear power. And the way it is, basically nuclear power is about, it's all about electricity. So that's the biggest reason for nuclear power is to produce electricity. And basically what it does, this power heats the water, and the steam is what it ends making the turbines run, and the turbines are the one that create electricity. And that's what, again, the uranium and the nuclear energy comes from. And as I mentioned, the 10 countries control 98% of the global uranium production. So what happened in the United States, and what happened, we go back to this graph, and you can see a big drop in 1990. And basically, what was the catalyst for that was we've had some nuclear disasters. And in the big one in the United States, I remember I was here and I lived in Connecticut, not too far from this place. It was a 3 Mile Island and near Middletown, Pennsylvania. So it was a partial meltdown. So that's what happens. It really hit the nuclear power plants and the whole attitude towards nuclear energy. And then we had in 1957, we had Sellafield in UK, and then we had 1957 in Russia disaster. But I think most of you, perhaps you remember the two biggest ones. The number one, again, I never forget that day when this happened, is the Fukushima nuclear disaster, which actually affected globally. I mean, we being in California, we could see the effects of it. And it was very, talk about the tsunamis and the heartfelt effect of around the globe. The people of Japan really reacted to that. So that was a huge one. And I think the damage was over $2 billion. But the biggest one was the Chernobyl. And it's interesting, still it's the center of attention even now with the Russia and Ukraine war. And the Ukraine, the situation was 1986, and it continued. And what happened, it was about $6.7 billion of damage done, the effects of it continuing. So basically, people have memories, and all of a sudden there was a big reaction after these. So again, after 1980s, this between the 3 Mile Island and then Chernobyl, USA really got away from that. But when we look at around the world, we can see countries in Europe, especially when we look at like Lithuania or France, they use over 75. Lithuania is about 81%, France is 75%. So it's a big factor as far as using or continuing using of the nuclear energy. So the reason we want to look at why investing in uranium might make sense is obviously at this moment you have the high commodity prices, is the inflation, is the world out there, is one of the most sought Google searches in inflation. Obviously, we have a higher crude oil prices for many reasons. And obviously, this Russian-Ukraine war has affected the supply side of things, not only in crude oil, but we talked about the uranium, but also, again, the thought of moving away from the crude oil, and that's the clean energy, having the alternative. And you have to remember, anytime one asset class goes up in any way, it affects the alternative and it comes with demand. Now, last week, for instance, we were talking about palm oil in Indonesia. and how does it affect the soybean oil, and all of these we look for the alternative. So this could be a catalyst, and the clean energy will be the way, especially again in Germany, for instance, that they want to get away from crude oil. So that's why uranium plays a role. So knowing why we want to consider uranium, how do we invest in uranium? Some of the vehicles that we could use. I mean, this is not something like gold that you go out there and buy gold bars or silver bars or platinum bars and just leave it at home for the inflation protection. So some of the ways that you could do, one of the first things comes in mind obviously is the futures market. So now, crude oil and natural gas, or base metals like copper, they all have active futures markets. And in this situation, there are producers, consumers, speculators, all established prices. The problem with uranium, it doesn't trade freely. It is by appointment. There's parties to it. So it's not something very liquid at all. So basically, I just want to show you, this is right at the end of the close of the day. You can see the crude oil was up 5%, that's $105. And we passed that 18-day moving average last week. So we are, gone back up there. And Brent crude, the spread is narrowing, but still it's 107. Natural gas, which had amazing few days. We went hit 899, dropped down to under 7, and now we are back at 764. And so when you look at the crude oil or natural gas, they're very liquid, they move. And of course, I want to, we can see how year over year they've been unbelievable. Look at coal. But then we look at uranium. The last was traded was on May 10th, and the last price was $54.15. And basically, it's based on, we look at the 250 pounds, we'll talk about that. And it's up 75%. So, and then what we look at basically an annual chart, the yearly chart for the past year, you see we had a nice jump in September. There was a lot of demand. And then again, all the commodities were doing well. And here, this is the point of the Ukraine invasion. And you see what happened. We went from below 45 all the way to 65. So we are at 54.15. So if I look at it for the historically, going back to end of 1980s, beginning of 1990, you can see that we basically had a big jump in 2007, and then 2006, 7, and 8. And then now we are back almost halfway. In a sense, we had dropped actually when you look at we went from 15 to all the way to like 135. We're at 54. So there's a lot of room to move up, but we've come a big, it's been a big move back after, again, Fukushima effect. You see how that affected. So there's a lot of sentiment. So the question is, would we continue? And if we do, how can we again invest in that? And as I mentioned, with the demand for clean energy, and I don't believe the oil prices are going back to their 50s or 60s. So that, especially again with China opening up, eventually, if there's that demand comes back, basically what will happen is, we will, I think that this Russia-Ukraine war was a wake-up call, and a lot of people in the environment, or they kind of using that to their advantage, looking for clean energy. So they want to expedite that. So the potential is there, especially the production still not there yet. So there would be need for the mining. Now, as far as the futures, if you were looking at eventually, again, just a food for thought, as I said, there is nothing going on. There was 800 contracts in the last 3 days. May 10th was the last one. But this is just the information for you, some specifics. The symbol is UX. And basically, for instance, now the May is being traded, but that's end of it. So June, which is a UXM 2020, if you want to trade it. But as I mentioned, there's not a lot going on. So this is not the place I would recommend to start investing. The best place will be in a diversified investments such as exchange traded funds. And there are three of them. So the biggest one is the URA. And basically they're involved in mostly companies in global uranium mining. And they have over 1.58 billion, and the Murray asset management or global asset investments, they are the underwriter, and they're the sponsor of this. So they're 1.58 billion, and their holdings, majority, you will see majority of time that Canada plays a big role. So 47% in Canada, 13% in Australia, and 11% in United States. And again, the sectors are mostly non-energy minerals, industrial services. They are involved in few and invest in other ETFs, utilities. And these are the biggest holding is Cameco from Canada. And then also they actually have some diversification with the Sprott Physical Gold as well. So this is what they have done. They're down 11.88% as of this afternoon. And basically just want to share that with you. So we'll see if we are getting to some kind of a support with this. The second one is a fund called Uranium, URNM, which is similar in a sense that they do invest in global companies, which is involved in mining. Now, they have $832 million under management, so they're a little, almost half the size of basically what the URA was. And again, they are in non-energy minerals. Cameco is the second largest. And when we look at charts, they're down about 12% year to date. So they've had a big downtrend, as you can see. And the last, but not, and also the last one is the NLR. And NLR has only 46 million. The difference between this one and the other two is that they're actually involved in the nuclear energy industry, not directly in the mining side of things. So, and they do have some, but they have a diversified portfolio. And that's the reason 51% is the United States and 11% in Canada and 9% in Japan. So you see, they're very much into utility sides. And that's why you see a lot of energy companies such as Duke Energy, Dominion Energy, and there's a lot of energy utility related. And because of their more of a utility side of things, they are down only 2%. So that's the difference between these three. So what if you want to do your own research and you say, well, you know, I'm really interested, but I want to invest in the companies, the mining companies themselves. So this is as of 2020. These are the 10 largest companies around the world. And you can see that BHP and Cameco, they are there. So as far as the production goes. So basically, some of the companies were listed in the United States and you could have access to them. And they're in the uranium mining sector. The largest one, when we look at the market cap, is the Cameco, the CCJ. They're from Canada, 8.87 billion market cap. And then the second one is the Next Gen Energy that has 2.6 billion. So there's about 4 companies from Canada and 4 companies from the United States. So Canada is obviously much larger exposure to the mining, so being the obviously 13% producer. So I just thought to just share with you the performance year to date, how these companies are doing. You can see, like for instance, the Centrus Energy is down like 58%. So basically that's the companies that you have access to. One of the things is I mentioned about, you know, France and, you know, talking about Lithuania and talking about, for instance, Germany and no, Argentina is the biggest importer. They do have nuclear energy. They want to go bigger on that. So they're just important, but there is a mining there too. So basically, that's a food for thought. If somebody wants to invest in South America, for instance, they are very small companies right now, but they are, you know, majority of the companies basically that you want to invest in, they are in Canada and have exposure, let's say in Argentina. And I will go a few companies in Canada if you have access to Toronto Exchange or Vancouver Exchange. But the biggest company that's the most famous as far as, you know, BHP is not solely on uranium, but Cameco is really energy and uranium. And basically they are the largest in that arena. And I thought just take a look at it. They're down 1.33%. I've followed them for more than 10, 11 years. They do have the seesaw. They can be a great winner, and they can also give you heartburn. So this is from, again, the Investor Business Daily. Just want to share with you some of the things as far as the supply and demand is up there. There's still a lot of demand, and you see the relative strength is at 90. So although we've had this big correction, of course, with the way the whole market has reacted, we are in a, right now, if you're watching this, this is May 11th, we are in a bear zone, and as far as NASDAQ goes, and very close for the S&P. So we've had a big correction with the stocks. Obviously, none of the stocks can escape that. They might be a relative escape, but they all have had a big correction, and that's what is, you know, Cameco hasn't. But once there's a stabilization, then this might be something to look at. So this is what I talked about, the uranium mining listed in Canada. And as you can see, there's quite a few. Some of them are listed in the United States, but if you had access to Canadian exchanges, then there are, you could actually look at some of these investments and stocks over there. So with that in mind, I hope I want to make it short and sweet. As I mentioned, we've done commodity analysis from platinum to silver to copper. We've done agriculture. We've talked about breakfast commodities, crude oil, natural gas. So if you're interested, we have them in our website and our classes. In the meantime, as I said, with the timing, with the sentiment the way it is, I think uranium will be an interesting subject, and might be an opportune time to look at it for further profitability. So with that in mind, I appreciate your attention. I hope it was helpful, and we can stop the recording and open up for any questions.